This is the chart. Market opened here. I woke up a little bit late even, so kind of a cool day where you can wake up late and then still make a good bit of money in a very short period of time. So we're talking about the market after this point. We opened up and saw that we're in what should be a textbook downtrend following situation. Why is this a textbook downtrend following situation? When we look at the overall market context, we have this failure of this uptrend. This uptrend, we call that a low, we call this a low, whatever. We see that this uptrend, no matter how you want to mark it, has failed. The market's coming back down. Then we can see here, clearly making new lows. Okay, great. So there was that yesterday. This is the day before yesterday, actually, the overnight. And then yesterday we come here, we make a new low, and then the market kind of trickles up overnight. And then the same thing happens here. We have another failed uptrend. Doesn't really matter how you mark it here. That's the point, is that this trend has failed. And we can go back and see, is the market responding to these levels? This is an inverted fair value gap. Market responded basically perfectly to that last night, or that's yesterday during the regular trading hours. And then we never even came back to that. So the market's coming down here, invalidating this uptrend, and we can look even to the left a little bit and see that this, if we're using that 3-minute strategy we talked about in a lot of the other videos, we're underneath that level. So the market's going to come down to the bottom. It did. And then we look over here, where are the failed second entry short levels? Well, if you look through here, there's quite a few. So this is a second entry short, we're underneath it. Over here, this is another second entry short, we're underneath it. This is a second entry, that's kind of just the bottom there. So if you don't know what a second entry short is, you can go look at the video in the chart there. The point that I'm making here is that this is a textbook downtrend. And now we're gonna go over, how do you trade a textbook downtrend? The first thing to make note of is, where is it headed? We see this is a macro low, and we see that there's probably congestion there. We'll make a little high volume node. So this area here is where support allegedly is. And so if we're trading up here when the market opens here, and we're in a downtrend and the uptrends have failed, we can assume that the market is likely to go to that support and possibly through it. And then if we zoom out a little bit, go to the left even further, we see that there are macro lows over here. So it's likely that the market's going to go down here somewhere. There's a high volume node here, it's failing underneath that, et cetera, et cetera. So let's get into the shorter term time frame stuff, get that off the screen, and go over how do we actually trade this. And when we do that, you'll see that it responded basically perfectly, which is always reassuring. I've been developing these for some time and now putting it together with the multiple contexts and things. And we're going to take a look and see, how does this actually respond to these? Where are these boxes? What are these doing? So right now I'm on a 3-minute chart. That's a longer term time frame chart for our purposes. These little boxes, this red box here, this is a second entry short that has, failed. And as that fails, we continue underneath it. But really, as the market opened here at the, 830 level, we're already failing that. So we go down to a 15-second chart. Look in here. In a downtrend, for all the reasons I just described relatively hastily, we can go into more videos about how to identify downtrends. The best position that you can ever take is against trades that have not worked that should have worked. That applies for uptrend, downtrend, range-based trading. The concept is always the same. When we're scalping or even swing trading intraday futures, you want to be trading against positions that should have worked, didn't, and failed. We are trading underlying psychological dynamics, always. All of this is derivative of the market psychology of the people who are participating. So we have a downtrend and a failed uptrend. If I can get over there. The uptrend failed. I have to go back to a 1 minute to look at it. The uptrend failed somewhere up here. And then we have to look to see, is the market respecting sell areas? So right here is a sell area. On the 1 minute chart, which we're on, this is an inverted fair value gap. There's a bull spike up here. The market comes here and then it attempts to hold. This is a buy location. If the trend was going to continue, it would have continued here hypothetically. Why? Inverted fair value gap, inverted LVN, whatever. I'm not going to zoom in. It's right here though. I will zoom in. I'll zoom in for you guys. This gap here, this big spike up right here, especially this one actually. So you have this as a down push. Market moves very quickly from here to here inside this 1 minute candle. And then for 5 or 6 or 7 minutes, it goes up above this, and then this is support. And there's an entry here. You can see that the market bottoms here, and then continues up. So this is a second entry long inside of an inverted fair value gap. We don't even touch it here. The market pushes higher and then it reverses down from there. So we look to see, as we've come back down here, the market attempts to hold this low. There's more buying activity throughout here. That implies there's more trapped traders. These are viable positions. There's a good reason to buy that. And in fact, if you were trading this, you probably maybe coulda, woulda, shoulda bought this, especially once you have a move back above this and then a move here, et cetera, et cetera. But then it fails this level. And then that's a swing high. So this is now the critical pivot point of this. I'm going to change the color of this box. So this area right here specifically is the pivot for this uptrend failure. Why? Because we have a fair value gap. It's initiative sell pressure from here to here. You see the gap here, you see a second entry there, and then we go below it. That implies that this is not working. And then we see that people are selling that, clearing their positions, and the market continues to come down. So we have identified very clearly a downtrend on the more intermediate time frame where we've broken below this low. And where should you look to sell that? Here, inside of this inverted fair value gap, and you see the market responds perfectly to it. So when you have the market responding perfectly to textbook entries, you can pretty well assume that you are in that market state. Generally speaking, that seems pretty reasonable if you ask me. So we're underneath all of this and we go down to a shorter term time frame and we look to see the exact same thing going on here. We've made a new low, we're in a downtrend making new lows, and then we then go and look to see where did these areas fail. The strongest reversal entry that I have found is when you have an initiative sell level. So we're down to a 15-second chart. Initiative sell level here is formed by this push, this spike down, and you have a second entry. If this reversal was going to hold, it woulda, shoulda, coulda held right here. And you see that it attempts to hold right there. This is a viable entry. Once you go below it, lo and behold, you can sell there. So you just do that. Not investment advice. Your reads are really important. But you have this bottoming here, it comes up to here, and then you sell there. We're on a 15-second chart, very straightforward. The market context is down. We're looking for trend continuation entries. So how do you trade this downtrend? Market is moving down. There's a couple things you can do. You wait for and it's like a 1.5 time frames failure. This right here is the same exact pattern. Initiative push down, move above that, should hold. When that breaks, you can enter here. You can enter inside the initiative push, which is right here. The market went slightly above that. Where did it go to? It went to this congestion area. So this is a high volume node. It's very strong, especially when you have accumulation up here, people attempting to hold this area, and then you can sell here for continuation down. The same, and then you can see it just going and going and going. So once we make a new low here, or even before the new low here, the exact same pattern in this context plays out. We're just gonna move this from this initiative push right here to this initiative push here. And you can see the exact same thing playing out. Market comes down to that, it bounced here, came back up, bounced here. There's attempts to hold this. Once we make a new low below that, all of these traders here, and you can use a fixed range volume profile to see, or just your eyeballs, that there's accumulation up here. Once this moves below this, everybody who initiated up here is stuck. That's my dog if you heard it. You can sell there and hold for continuation. Same thing. And very likely that this continues as we go down. There's not a really clear example of that inside of this, but if we're just downtrend following, really you can sell for any reason. This is a delta level. We come back above it, should be a buy. It fails if this trend was in reverse. I don't like this as a typical trend reversal level, but inside of a downtrend, you can sell for basically any reason and you're probably gonna win. This blue delta band is a level potentially. You see more examples of lows here, second attempt longs, and then a move below that. So it's a little less clear because the candles aren't quite as pretty, but inside of this area, this is a sell initiative push, this candle here, and you can just simply drag this fixed range volume profile indicator out and see that, like, yeah, this is the point of control. This volume accumulated inside of this uptrend up here, and then selling inside of this band is an area where there are potentially trapped traders and the market continues much lower. And like I said, you can pretty much sell for any reason in a downtrend. You see this coming down here, market attempts to hold that, it goes above that. This should have been a trend reversal. It didn't reverse here. It should have been a trend reversal. Why? Push down, second entry short, move above it. This area is supposed to be a buy, allegedly supposed to be. And so it inverts that, and then where can you sell? Right here, and then take off there. You have to be aware, however, as we look a little bit to the left, that we are coming into major, if it will actually show up, major support potentially. If I go to a slightly longer time frame, you can see that. Down here, why is this major support? Well, in fair value gap here, but also you notice we inverted it. And so you can do the same thing on longer term time frames. I'm going to clear all these drawings just to show you that allegedly this should have held. And this is an even better example because it's, why should this hold? Initiative buy, push up, inverted fair value gap. Even stronger, initiative buy, push down implies trap traders, hypothetical buy area on a longer term time frame. And then we have the macro low here. So we go into this and we see that the market comes here, it attempts the bottom in that, it goes here, it's holding, 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 and then it breaks down. And you can just assume that this is now a breakdown. It's breaking down, touches the macro low, goes below it. You can sell the macro low hypothetically. But the fact that we're below that macro low and continuing to push down implies that this downtrend is still intact. Basically everything to the left is failing. However, we are moving into a value area. When I say value, it's just a good price. Down here, it doesn't really show up on any indicators, so it's kind of messy and sloppy, but you really do have to be aware of and respect the idea that there are potentially longer term traders inside of this area that are waiting for things like a range overshoot return where the market might push below a low, and then that's like the actual low and the market will come back up. So up here, you can sell and hold. Like, I forget exactly where the reversal was. It's somewhere up here. There's the downtrend down here, and then once you, oh, it's actually here, intraday. So yeah, once we're below that, you can sell and hold. To where you got to be kind of careful. See, the market does pull back here, but then you wait for a secondary trend failure. The point being, once you start getting into major support like that, you have to take your positions off a little bit more proactively because it could reverse. But until we get a major reversal here, like a move back above this, and then this would be the buy pivot, this is a sell area. So hopefully that works out. I wasn't even going to click that necessarily. But you see the market's responding there. This new high here is a little bit suspect, but the market is retracing. Why is it a sell area? For the reasons I described before, where this is a reversal of this value area potentially. No, that's not why. Second entry short levels. It cleared above that, and then this failed, and we have a big down push here, and the market is now pushing down below that. So I haven't actually planned out the exit for that, so I'm just going to close it. But you can see that entering there is a good place to scalp. As we're in major support, we have to look for micro time frames and then trade against the micro time frames. But it does get a little bit sloppy, a little bit messy. You have to be a little bit more careful here. But the fact that we're trading below this macro low implies maybe you can hold this position. The strongest entries are these ones up here that I described earlier in the video. When this is failing, you're in a downtrend and you can just hold it. Had you sold here, scalping was maybe not the move. By maybe not the move, clearly not the move. If you would have sold here at 500, you could have made 250 points just by holding this. And there's a lot more money to be made by holding inside of trends, especially when you have entries. You position yourself correctly against where the failures on the shorter term time frames are, and then just hold that. And that's how you make more money in a downtrend. All of that's hypothetical, alleged. None of it's investment advice, except for, as you can see, this does work very, very well at times. You have to be aware of how you're interpreting everything. That's it for this video. Hopefully this makes sense. If it doesn't make sense, keep watching. If it doesn't make sense, keep watching. Regardless of everything, keep watching. I'm going to keep pushing these out. I'm going to keep making more of these. Going to keep making, better and better strategies and putting it all together. It is very reassuring when before the market or before we're trading, we identify, oh, this will happen, and then once it goes below that, you can sell here. And when the things work out how they should, I love that. And it implies that this is a real path forward. We can actually do this. You can actually do this. It's not easy to learn. will take a while, years possibly, but if you're watching these videos, that will speed up your learning curve, and I'm always happy to help. A little bit hesitant to put this one out because it took me 6 years to find this, but good stuff here. So thanks for watching. Click the subscribe button, all the typical YouTube stuff, and yeah, that's all. Have a good day.